What's going on, everybody? It's Jeff here. Welcome back to the channel. Okay, the market is starting to get hot again. And what I mean by that is market makers are starting to let stocks run instead of just yanking them right back down. So in this video, we're going to talk about two very important things. One, I'm going to cover exactly what happened on Friday. I'm going to break everything down for you. I had numerous amount of people reach out to me confused, asking questions about this. I'm going to cover in detail. There was a lot of people who profited very well off of either one of these two plays because the charts are pretty much identical, but there was way too many people that got burned by this. So I really want to cover this, and I hope that everybody that watches this video can remember this going forward and find value and learn when this play happens. The next thing that we are going to talk about is why I do not want AMC to squeeze violently. It is much more beneficial, in my opinion, for a slow and steady, almost Tesla-like squeeze to drag out for everybody. And we're going to go over in detail exactly why. So let's get right into it. First off, we're going to talk about two plays, but I want to cover one specifically because I felt like I said, way too many people got burned on this one. First one is DWAC. The next one is PHUN. DWAC we played on Thursday, and it was a little bit slower, and a lot of people banked on this. You can see this chart right here, violent to the upside and insanely violent to the downside. Remember this right here, and this is when I talk about AMC. The faster the stock moves up, the faster it's going to move down. Okay, so if you see a play that goes violently straight up, it's coming right back down just as quick. Remember that going forward. Next one, like I said, let's focus on this one right here, because this one, I had way too many people get burned by this. I gave out an alert talking about this play about 20 minutes before the open, and I had said, listen, actually I had said wait for that 635 break. I said that about half hour before open, and then I had changed it because the pattern has changed a little bit, and I said wait for that $8 break. And as you can see right here, you can go look on your charts if you're having a hard time seeing it, around 9:20 we had some resistance at the $8 level. It made a higher low, curled up, tested it again, made another higher low and curled up. And I said, once we break through that $8, that's your long. Wait until you add a position until that point. Let the stock show you it wants to move higher in the first place. And I think I gave this a $1 to $2 target and then profit taking right there, which is still an amazing play. From $8, $1 to $2 is anywhere between 12 and 25% on a play. Awesome. I want to go over what happened. This halted numerous times. I got out of this, I believe it was after, I think it was after the first halt. I sold into this pop right here. I got filled at about 14, I think it was 14 and change. I got filled and I let all of my position go. All right. And I know a lot of people are thinking, oh, well, if I sold here where you did, Jeff, like I could have sold at 23. I could have sold at 22. First off, the first thing you need to think to yourself is don't ever think about what you could make. You also need to keep in mind what you could lose. There were people that were buying in at $20. At $20 when the stock had already moved, I don't know, 100 or 200% in like 15 minutes. That's just unsustainable. They bought in at $20. They got stuck in this halt, and they got filled. I think they had a sell for 15 and got filled at $8. And first off, let me cover that right there. Halts are designed to, yes, help retail, okay, or help traders and investors to not get burned, all right, from a natural free flow. I mean, you got to think this price could have went a lot farther down if it was stop loss after stop loss after stop loss trigger, but they're also there to protect the market makers. All right, there's an influx of order flow. It's when a circuit halt happens when a stock moves 10% in either direction in a 5-minute span, regardless of volume. That's the number one thing I hate about, and why I feel like this is actually set up to favor market makers more than investors, specifically retail. All right, but we're not going to cover that as well. If you got into it in this late of a play, just think that you were chasing, okay? And like I said, it's okay to get out of a play and still watch it run another 10, 20, 30, $50 because you didn't lose on the play. But this is a perfect example of why there are people out there saying, oh, they want AMC just to wake up and it's just going to be, 2,000, 5,000, 10,000, whatever your price target is, 100,000, whatever it is, doesn't matter. The fact of the matter is, in order for all of us, okay, and that means everybody that's been invested since January, to actually profit from this, And I don't mean get max value. I just mean literally profit from this. It's going to be better for the stock to do exactly what it's doing. It went up, it hit that 25 from $2, made a higher base between $5 and $8. Went up, hit that $72, made a higher base above that previous, and now we're sitting around the 30. It's about a $40 base, I would say. We fluctuate between 36 and 44. Call it about a $40 base. When we make that next up, up to the, or we make that next high to the upside, eventually when it drops back down, we're going to sit at a higher support. Having this happen this way and looking exactly at the AMC chart is going to ensure that everybody can profit from this. If you have something that is insanely violent, like the DWAC, what happened, or even the PHUN, which was a little bit different because I understand that it only got to $24. However, I think it ran about 1,500% in such a short period of time. Just remember, there's going to be a lot of people burned on the downside. And when these halts happen and they trigger, you better believe that you know this as well as I do. Retail is going to be the last one filled. All right. So I know some of you can be impatient when it comes to AMC and you want it to just squeeze and be violent. And it's like the meme that you see with those two kids that are laughing and the price goes from 200 to like, I don't know, 2 million in like the span of like 20 seconds. Just remember when the same speed it goes up is the same speed it's going to go down. So for everyone to profit, the little bit slower, a little bit steadier is definitely the way to go. Now, lastly, about these two stocks, I do not know what is going to happen when they open. Okay, on Monday, we're going to wait and see. It's why people ask me about it all over the weekend. And what do you think? What do you think? I make no decisions whatsoever until pre-market that morning on whether the stock is going to show me if it wants to play. I don't just invest in stocks I think are going to move. I don't just invest in stocks that people say are going to move. I literally wait for the stock to show me it wants to move to the upside. I buy long. If it wants to move to the downside and I am able to short it because TD Ameritrade does not have, the best availability of shorts, then I wait for it to show me it's going to go farther to the downside, and then I will short a stock. But when it comes to either of these plays, if you lost on these plays, if you got stuck in the halts, first off, I am sorry because yes, it was violent. This one is specifically was violent. When you see this drop, I don't even know how many minutes it was. It's normally 5 minutes. I mean, this was what, 45 minutes? Yeah, from 9:54 to 10:41. It was 46, 47 minutes. And by the time it triggered at 18:34, it went all the way down. And a lot of people got filled at $8, especially if you had a stop loss in there. That was insanely violent. And unfortunately, the only way to try to avoid this is just remember the same speed it goes up is the same speed it is going down. So at any time you bought this, if this price, if you're watching this, if you're a part of the group, even if you're not, once this stock got to $11 after $8, after just a couple minutes after the first halt, if I was not in it, I would not have bought it. I wouldn't have. And it doesn't matter to me, oh, but you could have bought it at 11 and it would have went another 100%. It doesn't matter. The point of the matter is I've been playing this long enough. I've been in the game long enough. I've gotten burned so many times that if you don't get filled at your entry, okay, which was $8, if I didn't get filled at 850, maybe 9, seeing that massive 12 million volume candle, I would have walked away. And I never would have sat there and thought to myself, I wish I played it. I never would have sat there and thought to myself, oh, I could have done this, I could have done that. Those don't ensure profits. Okay, and the only way to make money in the stock market, like somebody had recently said to me, it was a great way. The only way to make money in the stock market is taking profits. You can buy all the stocks you want. It doesn't matter. It doesn't matter. You have to be able to take profits on this. And a lot of people, they got into this, they got into it late and they got burned on it. And it was bad. So whenever you think to yourself, and I try to tell this everybody in the group, don't let things try to ride and think they could just keep going higher and higher and higher, because the reality is, guys, not everything is going to go to the moon. Okay. And you clearly saw that with this play. So this is going to be one. If you do have TD Ameritrade, go use the on-demand feature, replay exactly what happened. All right. Anytime you see these stocks running insanely, don't think to yourself, don't let that FOMO get the best of you. It's taken me a long time to really stone cold be able to look at a play and just say, I don't care. I'm not in it. I didn't get in on it at a good point in time. There will always be another play, and I will not be chasing. And for example, for all of you out there that hold Shiba Inu, congratulations. I hope you all banked, but I'm not buying it. I'm not buying it. I wasn't buying it even a couple months ago. All right. And if I got into it back in April of last year, that's awesome. But I didn't. And it already ran, it made its course. I don't follow that nearly as closely. But the point of the matter is, it doesn't matter how many tweets I see at nighttime about the SHIB army going strong, making all this money. I'm not buying it because I didn't get in on it on a good entry. Okay. So remember, this is the same thing in real estate. All right. It's all about the buy, it's not about the sell. You got to buy at a good point. You don't got to just sell higher. You have to make sure you enter at a good, solid point. So I hope this video did help some of you. And I know that my first statement saying that I don't want AMC to squeeze violently, okay, might made people step back a little bit and kind of hesitate. But I hope that you understanding and kind of seeing my philosophy and the thought process and understanding how these stocks work, be like, yeah, you know what? Sure, we've been at this already for a few months. And chances are we got a few months ahead of us. Could be even longer. But if it continues on that slow, not so violent path, it's going to ensure that not only you, all right, unless you're staring at your screen all day, because I know a lot of you guys work, but everybody is able to profit from the AMC squeeze. So, guys, that's it for this video. I'll see you in the next one.